Welcome to Just a Thought, Investing for Millennials. My name is Sam.
I'm Dominic.
And I'm Brett, and today we have a short special episode about the trade war. So,
Yeah.
we were going to
Now,
talk...
is this the one where I go to my nuclear bunker or I just sell? Because there have been multiple wars in the past year, and I can't keep them in order.
Well, it's funny you bring that up because those two conflicts are very related with the current White House administration's tactics for dealing with problems. This is the one where hopefully you don't have to do either. My personal strategy is not to sell all when there's a slight hint of conflict. I find
Go to my nuclear bunker, is what you're saying to do now.
Go to your nuclear bunker and hop on Yahoo Finance and watch the stocks ride.
I have so much canned tuna on shares of Amazon, it's not even funny, Brett.
So, anyway, our audience should probably know what a trade war is first for those who don't. So, essentially, a trade war tends to be countries, I guess states in some scenarios, whatever, ignore that, countries fighting against each other through economic tactics. In most examples, it involves tariffs on certain products when they're imported into your country. So here, the Trump administration has announced. I'm not quite sure what the specific numbers are. Do we know what the specific percent tariff is?
50 billion on China, with a threat of 400 billion in tariffs.
Okay. And he's been targeting a lot of the steel and aluminum products right now. So you see companies like a Harley Davidson, who.
Poor Harley Davidson.
That was Yahoo Finance telling me that Harley Davidson is down a substantial percentage today.
Yeah.
So let's fill in the viewers. Basically, Harley Davidson doesn't want to get caught in this trade war because these tariffs would be very bad for business. Specifically, exporting to the EU would be around $2,200 more per bike. So they just can't afford it.
Which is a lot.
That's a huge. That's all of their profit, if not a vast majority of it. That would effectively kill their export business.
Now,
Harley Davidson is like, we got to take our business to Europe. And now Trump is going on Twitter and he's getting mad at them, saying they're waving the white flag and giving up. Taxes are just an excuse to offshore jobs. Where I think it's important to say they're not planning on exporting anything back to the U.S. This is just so that they don't have to, so that they could just avoid those first off tariffs. Yeah.
Now, I'm sure I know what you're thinking. Well, then, what is the White House reasoning in these tariffs? And, well, their logic is that by putting these tariffs on companies that come in and sell their steel and aluminum to us, by putting these tariffs, they'll be less inclined to do so, and the domestic industries will be strengthened by having less competition to deal with from other countries, and it'll altogether boost the United States steel industry, which the administration feels is very weak as of late.
So I kind of feel that because the United States economy is so much more involved in a tertiary sector now rather than primary and secondary sectors, which is like mining and then refining, that these tariffs are helping a dying industry. They're helping a dinosaur. And not to mention the fact that there's all sorts of externalities. So any company that currently buys steel for raw material, I read an article about an RV company. They're going to have a 35% premium on their raw materials now because they can't import steel from China. So now Trump's tariffs might be helping for the primary sector, but the secondary and tertiary sectors are definitely suffering. And now, back to what I said about how the nuclear crisis, quote, nuclear crisis with North Korea, and these tariffs are very similar. I personally feel like they're not that they're all talk, but that they're being used as distraction from other issues. So, for example, like with the Stormy Daniels scandal, notice how there's so much less attention on it after these tariffs broke, and now that the media is eating them up. So it's important to realize that the what's been implemented so far is very reversible. It hasn't had a huge economic impact. Obviously, there's examples like Harley Davidson and companies that really depend on the steel and aluminum markets. But the 400 billion threatened, that's the kicker, and that's what we're going to be talking about, whether we think that those tariffs are actually going to be implemented or not.
Yeah.
So one more thing I was saying with Harley Davidson that I just meant to correct is, even though the tariffs with Europe aren't fully in place, because there's all this talk, it's likely that they will take place, and they will be very devastating. So that's why Harley they're basically just focusing on the rest of the world while America sorts out all this trade war nonsense.
Yeah, so I personally think that this potential trade war and these tariff threats, I think it's a lot of talk. I'm skeptical of how much this is actually going to happen. I think for this to actually happen, the administration has some clue on the potential repercussions, and it's more threats towards the other countries about, Trump wanting to show the strength of America and trying to show the strength of the steel industry. I think there might be some tariffs, but I don't think it's going to be anything too big that could seriously affect the markets. Some people are talking this will escalate into a potential recession. I'm seriously skeptical that that's actually going to be the case. Sam, what's your perspective on it?
I don't think we're going to see a full-on recession, anything like 2008. But with another big target of this trade war is tech, really, in America and China. The U.S. is really hitting those Chinese tech companies like Alibaba to take a shot. Also, Tencent, JD.com, which we talked about in the last episode. All those large tech companies in China. And China is still such a large emerging tech market. Since we're attacking that, that's very bad for our markets. So we could see potentially like a 5 to 10% dip in the markets, and it won't be pretty. I mean, it won't be devastating to anyone, but it'll be very annoying and sad.
Yeah, I think it'll be a duplicate of what happened with the whole North Korea and nuclear quote crisis. It dips for a couple months, recovers. For a while there, we were coming back stronger than ever, and then the tariff talk came out again, and it kind of crushed the momentum. But that's my personal feeling. If I were the listener right now, I would invest heavily in China. I see it as that those stocks are on a bargain right now. So as we previously mentioned, Alibaba, Tencent, JD.com, those are my big three. I personally just bought, not just bought, a couple days ago, bought Alibaba. It has gone down since then. However, I still believe in their future, and I would still recommend it, just because they have such prevalence in an emerging market, and interest from the big American players that doesn't necessarily guarantee them success, but it puts them in a position that's very likely for them to be successful over the next couple of years.
Right. So another stock I also feel will benefit from this is an American steel producer called Nucor Corporation. They produce a lot of steel here in America, domestic industry or domestic company, and if as these tariffs, some of them at least are put into place, and even if more are, this American steel producer will have less competition internationally, and that they'd likely benefit from the tariffs on steel being imported.
Yeah, the steel company, in America, steel companies in America should do well. Also, steel companies in Canada could definitely rise, because Canada, 55% of their steel imports are dependent on America, and another target of this trade war is steel export to Canada. So it'll be interesting to see how a smaller market in Canada with smaller steel companies, how those companies can grow when they're a lot more focused on.
And think something you also need to look out for is companies that rely on steel a lot in their production. Personally, an example I think is Caterpillar. They rely heavily on using steel, and with these tariffs, it'd be harder for them to get steel for a cheaper price, and they'd be forced to either pay up or use the American steel, which would be the American produced steel, which would be a higher price. So I think a company like that might be affected negatively with these tariffs.
Yeah, also companies like Fiat Chrysler, any American-made car. So General Motors Corp. They are projected to take a pretty big hit because almost number one. If I'm not mistaken, is the most number one used raw material for them is raw metals like steel and aluminum. They're going to get killed if these tariffs go through for 100%. So if you have those, this might not be a great time to have them. You might want to buy or sell what you can, and then wait it out and rebuy. Or if you're just in it for the long haul, hang on to them. Because as we said, at least I personally feel that these tariffs are mostly talk, and that they're just going to be used as a bargaining chip.
Now, another thing happening with these car companies is that Trump is trying to raise the tariffs on imports on cars we're getting from the EU. So he's trying to say, let's not let them send their cars to America, so that our American car companies can do better and block out this European competition. And there's a viewpoint that says that's really good because we're focusing more on American car companies and trying to create jobs here. And then there's the other side that says we don't need to create jobs here, and we're disrupting a very nice working free trade market that's doing well right now, and we do not need to interfere with that.
Yeah, so I also want to mention that the car market is a good example, but some of the things that the current White House administration is doing is slightly hypocritical, whether you agree with it or not. The car imports, for example, when you tax steel and aluminum so heavily, even if you limit some competition, it's still hard to see their growth just because the prices of their cars will have to increase to stay profitable. Along with some other examples of the White House being hypocritical. Again with the North Korean scandal, they talk about how big their firepower is, and then they end up negotiating with North Korea, and then North Korea gets whatever got exactly what they wanted, and the U.S. ended up with almost nothing. And then the White House called it a win. It was hypocritical of the administration to call out the fact that they did such a good job with diplomacy, even though Kim Jong-un got exactly what he was looking for. Now, regardless of your political position, that is factual information. North Korea got sanctions lifted. They might have blown up the building with their nuclear research, but they still have all that information. Now, the counter argument to that is North Korea is no longer a nuclear threat for the next couple years, but economically it gave an advantage to China and North Korea, which is exactly what Trump is trying to avoid with these tariffs.
Right. So, just a final rating. What do you guys think of companies that might benefit? Like a rating of 1 to 5 on Nucor Corporation. What do you guys give it?
So I'd give that a 4 because it is a very good company, and they do have dividends. So if you are a longer-term investor, you'll see that Newfield, I believe it's just over 2%.
Yeah.
It's nice to be able to collect that extra bit of money from the dividend over time. And also it is a steadily rising, pretty safe investment steel company. There's not really too much risk. Analysts like it. They have good financials. So overall, they're 4, maybe 4.5. Just because they're not going to be the fastest acting company out there, but they're safe.
Yeah, I have to agree with Sam on that one. I kind of feel like if you were to buy, the symbol is NEU, correct?
NUE, I think.
NUE. Well,
Yeah.
if you were to buy that company, um, you're betting on the fact that they will rise faster than other companies will recover from the tariffs. It's a much safer investment than, for example, buying Alibaba now and banking on the fact that the tariffs are going to be released or changed in some way. Um, but if you're looking for a nice, safe and or safer investment with a good dividend boost, I would recommend it. So it has to be a 3.5 and a 4 for me. I'm not 100% confident just because I'm more into tech stocks, faster growing growth stocks. Um, but if you're more conservative, I would give it a buy.
Right. I'd probably give it between 3 and a 4 too. I think it's a buy. I don't think you're gonna see anything big on it. I think that these trade war talks are gonna fizzle down in a couple months, so I think it's a buy now. Hold on only a couple months, maybe sell it off. I get a nice little short return. I don't think it's anything big down the future. Um, what do we think of stocks like a General Motors or a Chrysler that might be affected?
So these car companies, one more thing I did that I meant to mention earlier is that these car companies don't really want Trump's help. They've openly stated they don't want Trump trying to block imports from the EU. They're just not interested. They basically say it's messing up the system, and they prefer to have that free market. So overall, these car companies, they're not going to be great in the short term, but cars are cars. They'll be fine in the long term. Cars are not going anywhere. And then steel in the U.S. and steel in Canada, the intra companies, the companies that are in those countries, those are the ones that are going to do good. Companies that depend more on exporting are definitely bound to take more of a hit. But if you are investing, try to look at companies that do more of their business all in the U.S. because it's the companies that depend, the ones that are more global, they're more likely to be affected by all these tariffs that are happening all around the world. So if you find a company that does that accumulates all their revenue in the U.S., an example is Public Storage. I'm not saying go buy it. Wells Fargo is also another example. So if you find companies that just do all their service in the U.S., they should stay away from the trade war better than companies who are spread out all around the world.
Right. Yeah, I agree. Along the line of these car companies, and I don't know, a company like Caterpillar that I mentioned that rely on steel, I personally think it's a hold right now. I don't think I would worry about it too much at the moment. You want to monitor the situation closely. I'd hold on to companies like General Motors, Caterpillar, things like that. And then something like Nucor, you might be able to make some nice money off of this trade war with.
Yeah, so as always, I'd like to end with a quote from Warren Buffett. I agree with the things you guys were saying. Um, and it's should you find yourself in a chronically leaking boat, energy devoted changing vessels is likely to be more productive than energy devoted to patching leaks. So, for example, if you had large investments in to historically primary sector Chinese companies with this trade war, rather than trying to hang on to them, it might be worth selling and getting out and getting into another industry like the primary sector American companies that will benefit from the trade war, or that can be applied to any other situation where you have a failing stock or a stock that's not doing so well, just to sell it, cut your losses, and go into something else that you believe in. So this has been Just a Thought, investing for millennials. And if you guys don't have any further thoughts to add, I think we'll call the show call it a day.
Right, and just please, check us out on the Apple Podcast app, and give us a like and comment on YouTube, please. We'd really appreciate it.